Hey, how's it going, guys? So today I'm going to go over stop loss and how you can incorporate this into your trading. A lot of you guys are having these big, massive losses every other day after you take a good win, but realistically, your wins and losses should be the same amount. We'll go over that positioning sizing in a different video, but for today, I'm going to go over stop loss and how we can use that to help us minimize as much risk as possible. So this is going to be the actual definition for stop loss. So an instruction to execute a trade for a given security when a specific price level is reached. So that's pretty self-explanatory. I'm going to go over three different orders types you can go over. Number one is going to be very good for beginners, percent value. So in options, you don't you can't really drag and drop a stop loss on the chart. On shares you can, so like you can literally use one of these lines as a drag and drop, but you can't move your stop up like that, unfortunately, for options. Um, so percentage value, if your contract costs 1.50, your stop loss will be 0.30 for a 20% loss. I find 20% being a pretty standard loss. Um, Especially if you have more than one contract, you don't really want to go anything higher than a 20% loss. And in theory, when you get into your trades at your right price level, you shouldn't be negative 40% unless there's something else going wrong with the trade. But 20% is ideally a really good middle of the road percentage, in my opinion, and I've tested this out for quite a while. Um, Going into another option for more advanced traders would be support or resistant level. Um, these can be used as more of a hard stop. Just as soon as you tap that level, you get out. Um, you can set a stop loss there if you're on shares. Options, it'll be a little bit more difficult. This is why I say it's for advanced traders because you need to be more disciplined and more in touch with the market to hold yourself accountable. Um, so basically, pivot high or lows would be a good example of a support or resistance. So for today, for example, you see that we put in this low of 503.92 on QQQ. As you can see, I'm looking at the hourly as well. We built above this 505.71, which was a previous support level that we broke through. We reclaimed it. Um, so you can use that previous support level, now resistant level that it became, as a stop loss. So as soon as we reclaimed it on this candle, I would have gotten in and just used this as a basic uh, mental stop loss. Um, Obviously, we did not come back down from this specific level price point. This same candle we did actually print above 509. So that would have been a beautiful trade with um, no hard feelings of it losing a lot of money. I mean, if it came back down, you would have lost like 10%. That's nothing to cry over. So another thing is a trailing stop, which is 0.10 increments is what I like to use. So for example, we would have got in at 505.71 for example. So every 0.10 your trailing stop would move up. So 505.80. The only things if it does pull back 0.10, you are going to get stopped out. But for this specific trade that was later in the day, you want to be tighter on risk. So that would be good. You would have only gotten stopped out on your trailing stop here, but you would have had no, especially on momentum, trailing stops are really good to really maximize the profit taking. So here you would have realized that this was pretty much the top, and you got most of the profit out of the trade. And yeah, so that's basically how I use stop losses. My favorite, like I said, is trailing stops on momentum trades only. On trades when the trend is a little bit more set, there's a little bit less volume. I like using previous support or resistant levels, such as this 505, 509, 511, 503. If there's anything else you guys want to see me explain, just let me know. And yeah, have a good day, guys.